Welcome. In this video, can Xcn coin price explode soon? We will analyze it. Don't forget to subscribe, like, and please watch till the end to understand. When closely examined on the chart, it is clearly visible that the price movements have been exhibiting a downward trend over a specific time period. This trend is referred to in technical analysis literature as a downtrend and is typically defined by a series of lower highs and lower lows. In the current scenario, the price has been moving distinctly within this downtrend structure, pulling back to lower levels with each attempt and thereby reinforcing the validity of the trend. However, in technical analysis, not every downtrend is expected to last indefinitely. On the contrary, such structures often weaken over time and may give way to upward breakouts. The fact that the price is now trading very close to this downtrend line is an exciting and hopeful development for investors. Prices approaching the upper boundary of a downtrend often indicate a period when selling pressure is easing and buyers are beginning to gain strength. In such cases, the trend line serves not only as resistance but also as a psychological barrier. When the price manages to break this line to the upside, it is perceived by many investors as a sign of a new bullish phase. Therefore, the current setup should be considered technically positive. If the price successfully breaks this trend line to the upside with strong volume, it will send a powerful signal that the downtrend has ended and that the market is beginning to shift into a more positive structure. Such downtrend breakouts can signal the beginning of not just short-term movements, but also potential medium to long-term upward trends. Throughout a downtrend, price repeatedly fails to move higher due to seller dominance. But once the trend line is broken, this pattern of failure ends, and the balance of power in the market begins to shift toward buyers. These kinds of breakouts are often referred to as trend reversals and can lay the foundation for a new uptrend. Investors who follow technical analysis often reassess their positions at the moment of such a breakout and may take action toward buying. Additionally, the increase in volume as the price approaches this trend line strengthens the likelihood of a breakout. Volume is one of the most important elements in measuring the strength of a price move. If trading volume increases as the price nears the trend line, it usually indicates that major players are also watching this level and may enter the market upon a potential breakout. A breakout supported by volume generates a much stronger signal than a typical resistance level breach. Therefore, the noticeable increase in trading volume as the price nears the downtrend line in the current scenario indicates strengthening bullish expectations. Moreover, each touch of the downtrend line reinforces the significance of that level. The more times it is tested, the stronger the technical level becomes. In the current situation, although the price has tested this downtrend line several times and retreated each time, each new touch weakens the resistance and increases the likelihood of a breakout. This suggests that the price is patiently building energy, which could soon translate into an upward move. At the same time, the formation of higher lows with each approach to the trend line is also considered a highly positive technical signal. Although the price has not yet broken above the descending trend line, the fact that the lows are gradually rising indicates that buyers are gaining strength and sellers are starting to weaken. But we can't make decisions based on trends alone. Let's also take a look at other metrics. Stay tuned. When price movements are analyzed within the framework of Elliott wave theory, it appears that the market is currently completing the second wave. What is particularly noteworthy at this point is that after completing the first wave, the price has entered a corrective phase referred to as the second wave. The second wave is generally a period during which the market experiences a short-term pullback following a previous upward move, as investors take profits and the market pauses to determine its next direction. During this phase, the price attempts to stabilize after the initial rise and lays the groundwork for a new upward wave. This correction typically aligns with Fibonacci ratios and most often ends around the 50% to 61.8% levels. Therefore, the current correction can be considered a sign of a healthy uptrend forming. According to Elliott wave theory, the third wave that follows the second is typically the strongest and most aggressive upward movement. From a technical analysis standpoint, the third wave represents a phase where investor confidence peaks, buying pressure becomes apparent, and the price gains substantial value. This wave is also generally the longest and most voluminous. In the current setup, it appears that the price is either completing or has nearly completed the second wave. In this context, it can be said that an exciting and promising period is beginning for investors. When the third wave begins, the price is expected to move at least 1/618 times the length of the first wave. This ratio is one of the fundamental Fibonacci extension levels and is commonly used as a reference point for the third wave in Elliott wave theory. In the current scenario, the target for the third wave has been set at the price region corresponding to the 1618 level. However, in a more optimistic scenario, this wave could extend to the 272 Fibonacci extension level. This means that if the third wave develops strongly and meets theoretical expectations, the price could reach levels that satisfy investors both technically and psychologically. Moreover, from the perspective of investor psychology, the third wave typically occurs during a period when overall market sentiment turns positive, news flow is favorable, and key technical levels are consistently broken. During this phase, price movements tend to be more decisive, stable, and rapid. This implies that the third wave could offer gains to investors in both the short term and the medium to long term. The current technical setup supports this possibility. In particular, the fact that the second wave correction has not been very deep suggests that the price has retained enough strength and has a high potential to channel that strength upward. The 1618 and 2272 target levels identified through calculations using Fibonacci extension levels are not just mathematical ratios. These levels also function as perception thresholds in technical analysis. Since many investors and algorithms base their positions on these levels, the behavior of the price as it approaches or reaches these points can provide much clearer signals about the overall market direction. For this reason, the beginning of the third wave to the upside makes reaching these targets not only possible but also a highly likely scenario. The RSI indicator stands out as one of the most frequently used oscillators in technical analysis and serves as a crucial tool for understanding market momentum. When we closely examine the current chart structure, a clearly defined downward trend line on the RSI becomes noticeable. This trend line has acted like a resistance level, with the RSI attempting to break above it multiple times in the past, but facing rejection each time, thereby limiting its upward movement. However, such descending RSI trends have the potential to produce early signals ahead of price action, and if a breakout occurs, it could be a precursor to positive developments in price. Trend lines formed on momentum-based indicators like the RSI gain even more significance when it comes to understanding the current strength and potential direction of the market. In the present situation, the RSI is approaching this descending trend line and gradually starting to test it. If the RSI manages to break above this trend line, it can technically be interpreted as a signal of a momentum reversal. This means that an upward breakout on the RSI could indicate increasing buying pressure and suggest that the market is regaining the energy needed for another upward move. In such scenarios, a trendline breakout on the RSI can have a strong impact not only on the RSI itself, but also on the direction of price action. Typically, when the RSI breaks its downtrend to the upside, this is reflected on the price chart as a bullish move. Especially if the RSI is above the 50 level and breaks a descending trend line, it is often seen as a sign of a strong rally beginning. In such cases, investor confidence tends to rise, and the resulting positive sentiment spreading across the market can lead to acceleration in price. We need to see this trend line break. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.